Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, August 14th, and we did have CPI in pre-market today. Numbers came in better than expected, 2.9% year over year, and expectations were 3%. And I just spent about 30 minutes on Twitter, and if you just put CPI and start reading, it is absolutely wild to hear people's perspective on inflation. But my favorite comment was from Peter Schiff, and it reads, the main reason July year-over-year CPI only rose by 2.9% was that used car prices dropped nearly 11%. How many used cars does the typical American buy each month? Yet auto insurance prices rose by 18.6%. And honestly, I think that was a pretty good point, because if we have better than expected inflation because of that one metric, then really we didn't have better than expected inflation. So just something to think about. And the markets weren't very impressed with that data either. SPY did open up slightly, just enough to fill this gap from Amazon earnings 2 Thursdays ago. So we closed that gap out, then pushed back a little bit, and then tried to make a run to get above the 50-day moving average, got pushed back down, and we closed just underneath the 50-day moving average. So pretty slow day in SPY, not a huge reaction, and we did close up 0.32%. VIX came down another 10.55%. So here we last Monday had VIX at 65, and we are down at 16. And this honestly could be one of the biggest VIX crushes in history. That was an absolutely wild move. And from that 35 EMA right here, the weekly 35 EMA, I know we went a little bit underneath it, but from that level to the 50-day moving average, that was almost a 6% bounce in 10 days. And today we did close within the implied move. And SPX, same thing. We opened slightly up, just enough to fill that gap from Thursday 2 weeks ago. That was after Amazon had earnings, and the next day the markets gapped down, and we filled that gap today. Then we came up, tried to get above that 50-day moving average, got pushed back, and we closed just underneath that 50-day moving average. SPX closed up 0.38%. VIX down 10.55%, and here we also did stay completely within the implied move. And then taking it over to QQQ. QQQ did open flat today, and we had a flat day overall. Actually, from where we opened to where we closed was completely flat, and I'm not even really sure if there's anything to say about today. QQQ price action was completely flat. We had very low volume, and really there just wasn't a reaction to CPI data today at all. We stayed flat. QQQ closed up 0.03%. VXN down 8.9%, and we did stay completely within the implied move here. And you could see that today, that 35 EMA did come above the 30-minute 200 moving average. This is a bullish cross-up. We also have that 4-hour 200 moving average right there as well. But we did have that bullish cross-up, and then today we did stay above the 35 EMA. So a really uneventful day in QQQ, and probably one of the weakest CPI day reactions I've seen in a really long time. Like I said, the markets did not seem very impressed that we did have the best CPI numbers since 2021. So then switching it over to IWM. So IWM did open up today. So we opened up in this gap just above the 50-day moving average, and this gap was from last week Monday when we gapped down, that huge gap down, and we had just a little bit left over, and we got into that gap and got pushed out before closing it out. So bears are strong in this gap in IWM. So we got pushed back down to the 35 EMA, and that is basically where we stayed for the rest of the day, and we closed right above that 35 EMA. IWM did close down 0.62%. VX also closed down 9.97%. So volatility got absolutely destroyed in all of the indices. And here we did close within the implied move. And DIA did have the biggest up day today, and we did open with a gap up, and then we did come back down, fill that gap after getting pushed back down from the 30-minute 200 moving average. And once we filled that gap, we swung up, got above the 30-minute 200 moving average, got above the 1 hour 200 moving average, and we made it all the way into this gap right here. And that gap was from 2 Thursdays ago. So this again was that gap from Amazon earnings, and we just barely made it into that gap and got pushed out. So Amazon gap showing a bit of resistance in DIA. The Dow Jones closed up 0.58%, and we did stay within the weekly implied move and also the 30-day average volatility here. All right, guys, I started this video late today, so let's head right into tomorrow's trading ranges. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and if you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you have any questions at all. I do try to get back to all comments within 24 hours. So if you don't understand something that I'm saying, let me know and I'll try and explain it a little bit better. And if you learned something new today and you want to buy me a coffee, don't forget about that thank you button. It's a really easy way to show appreciation, and I definitely appreciate it. So starting in SPY, tomorrow's implied move is between 539 and 549, and that is from options. The 30-day average volatility is much wider, 532 to 555. And then the implied move on Friday's contract is between 537 and 551. And to the upside, directly above where we closed, we have the 50-day moving average. And then above that, we do have the 1 hour 200 moving average. These two levels really have the potential to be resistance tomorrow, especially with how overbought we are. So 2 big moving averages directly above us. And then if we get above that, the top of the implied move is at 549. 551 is the top on Friday's contract. And then the 30-day average volatility takes it a bit wider, and right at the top here, we do have our next resistance level. That is at 554. I don't imagine with VIX back at 16 that we're going to be blasting up 2% and needing to know that, but it is good to know where our next resistance level is. So that is the upside, and then to the downside, we do have the 35 EMA. And let me just fix the color on that real fast. And 35 EMA is underneath us. You should always know where the 35 EMA is. And tomorrow it is underneath us. And if that doesn't hold as support tomorrow, and you can see that it has been support ever since we gapped up last Wednesday going into Thursday, we got above this 35 EMA, and that has been a pretty steady support for us during this squeeze. And if we get underneath that, 539 is the bottom of the implied move. 537 is the bottom of the implied move on Friday's contract. And at the bottom of the trading range, we do have this up gap, and that is from Monday going into Tuesday. So this is where we saw PPI. Today we had CPI. So this is the up gap right before inflation data. And after we did gap up, we did fill the entire Amazon earnings down gap with the inflation data. And I don't think I mentioned we also have the 30-minute 200 moving average right here, and that could definitely be a support now that we got this 35 EMA back above it. So if we do lose this 35 EMA, the 30-minute 200 moving average definitely could be a support tomorrow. So that is SPY, and then taking it over to SPX. The implied move over here is between 54.15 and 54.95, and that is from options. And I trade SPX almost completely, and I can tell you that there is no way that I am using these strikes right here. With volatility where it has been in the past 30 days, this is way too close. And I am just reading these numbers out because that is what options is saying, but I definitely will not be trading that close. I might even look higher than the next day. So Friday's implied move is between 53.99 and 55.15. And again, with volatility where it has been in the past 30 days, even that feels a little bit too close. So that's just my 2 cents. Options are saying this is the expected move for the next 2 days, but to me that just looks a little bit too close. So to the upside, we have the 50-day moving average, and we did see resistance there after filling the rest of this gap from Amazon earnings right here. So we filled that gap, got to the 50-day moving average, and we did see a bit of resistance. We closed just underneath it. So it is possible that we get above it, and if we do, 1 hour 200 moving average is right there waiting. We are pretty overbought here, so we might see a little bit of pushback at these 2 levels. If we don't, if we push higher, 54.95 is the top of the implied move for tomorrow. 55.15 is the top of the implied move on Friday's contract. And then the 30-day average volatility takes us much higher, 55.65. I'm not saying we push up to that level, but within the past 30 days, we've seen really big moves, starting with some of these drops right here. And then on the way back up, we also saw big moves. It is possible. And right at the top of the trading range, we do have this resistance level right here. This is where we filled the gap. We had an island top right here, and I don't have my notes in here, so I don't know what these gaps were from. It was definitely before Amazon earnings, so possibly during some big earnings here. But as soon as we filled this gap right here, we saw resistance, and it sent us flying down. So that is at 55.57. So that lines up pretty close with the top of the trading range for tomorrow. So just know we do have resistance at that level. And then underneath us, we have that 35 EMA. Ever since last Thursday, was it last Thursday? Yeah, last Thursday we saw that gap up, which took us back above that 35 EMA. And we've seen that as a pretty constant support. Since then, we did get pretty overbought, and we could see some resistance there. So definitely possible that we test this 35 EMA, and if we break it, the bottom of the implied move is 54.15. On Friday's contract, that is 53.99, which means I didn't round it. So what is that? 5,400, we can call that one. That'll take us to a nice round strike. So 5,400 is the bottom of Friday's implied move. Underneath that, we have the 30-minute 200 moving average. So if we do break that 35 EMA, I would be targeting the 30-minute 200 moving average. And then we also have that up gap from right before inflation data. This took us to PPI, and this was CPI. So this was our August inflation gap right here, and that is at the bottom of the trading range. And then just underneath that, just to add one more level, we have the 4-hour 200 moving average that is outside of our trading range for the next 2 days. So that was SPX. Now taking it over to QQQ, the implied move over here is between 457 and 469, and that is from options. That is a very small trading range compared to the 30-day average, which is much wider, $10 wider in each direction, 447 to 479, and the implied move on Friday's contract is between 455 and 471. And to the upside, we don't have anything within the implied move to look for, but the top of the implied move is 469. Right above that, we have the 1 hour 200 moving average coming down. And then the top of the implied move on Friday's contract is 471. And at the very top of the trading range, we have an island top, and that is this up gap, this down gap, and we also have this 50-day moving average going through it. And then also you could see this thick green line. That was a resistance right here, and before that it was a support, and that is actually a support that goes back even further, and that is right here. So that is around 474, and that was support, and then when we dropped underneath it, it was resistance. So that is at the top of our trading range tomorrow, or near the top at least. Then that 50-day moving average is right here, and then we have this up gap and this down gap. So this could be a battle zone if we get to it. Right now we are looking pretty overbought. And then to the downside, we do have the 35 EMA. You could see last Thursday we gapped up, got above the 35 EMA, and that level has held us up ever since. So always know where your 35 EMA is, and it is underneath us for tomorrow. Bottom of the implied move is at 457, and that also lines up right here with the 4 hour 200 moving average. Then underneath that, 455 is the bottom of the implied move on Friday's contract. 30-minute 200 moving average is also running through that gap. And remember, we did see that 35 EMA cross up and above the 30-minute 200 moving average. That has turned this time frame bullish. So keep an eye on that level if we break the 35 EMA. The momentum there is still down. So even though we did get that bullish cross up, if we do drop down, we do have downward momentum, and that could pull us down for a retest. And then I don't know if I mentioned, but we do have the rest of this down gap right here. We gapped into that gap and pushed up. So we do have the rest of that here along with this up gap. So we do have a little bit of support around here if we do drop. And the bottom of that gap is at 451. And then underneath all of that, we do have the weekly 35 EMA. And I have mentioned in many past videos how important this level is. The 35 EMA on the weekly time frame has been defining our uptrend for over a year and a half. So this is January of 2023, and we bounced up, got back above this 35 EMA, and we have been trading above that level ever since. So every time we had a run, we came back down to it and we saw support. Then we had another run, came back down to that level, saw support. Third run, came back down, did drop underneath it, but we did see a little bit of support. We got pulled back up, but at this point here, we are extremely overbought. So personally, in my opinion, I think we will find ourselves back underneath that 35 EMA. The momentum there has flattened out. So a really big bounce off of here isn't extremely justified. The only thing that I could think of that would push it higher is that we did have VIX at 65 last week. And because VIX got crushed so hard, we could see a squeeze up a little bit higher. That was absolutely a historic move in VIX, and this is QQQ, so we're talking VXN here, but in general, that was a historic volatility crush across the markets. But personally, I'm hoping that we get ourselves back underneath and see a deeper correction. But again, that is my opinion. Don't trade my opinion, trade the chart. So that 35 EMA is underneath the entire trading range for the next 2 days. So right here, and that is QQQ, taking it over to IWM. The implied move for tomorrow here is between 203 and 210, and that is from options. And IWM has been doing a much better job of actually staying within the implied move. The 30-day average volatility is wider, 200 to 213. And then on Friday's contract, 202 to 211. And to the upside, we have the 50-day moving average and the rest of this gap from last Monday's drop. And both of those levels have been teaming up to act as resistance. We saw it right here, and then last week right here. So 50-day moving average, 50-day moving average, and then that 50-day moving average is right here to the upside, and then the rest of that gap is right above that. Top of the implied move is 210, and then 211 is the top of the implied move on Friday's contract, and 211 is also that level. If we zoom back out to the 5-year, that is right here. We saw that as support during the COVID era of trading, and then once we dropped underneath that, that was our resistance, and then resistance here. Recently we did rally, get above that, and then we filled this bear gap up here, but then we did drop back underneath. So 211 is above us, and it's at the top of tomorrow's implied move, meaning Friday's. And so this dashed line is that 211, and then above that, at the very top of the trading range, we have an absolute mess. We have the 30-minute 200 moving average, 1 hour 200 moving average, and the 30-minute did cross underneath the 1 hour. That is a bearish signal. And then we do have this up gap, and this down gap, which is an island top, and this could definitely be a battle zone if we do push above that 211. And then to the downside, we have the 4-hour 200 moving average. Today we did stay above that level, as well as the 35 EMA. Always know where your 35 EMA is, and for here it is just where we closed. So we did chop around that today. So if we get underneath it tomorrow and see it as resistance, then start looking to some lower levels. And then so that 4-hour 200 moving average is there. We did see a support right here, so right around 204. 203 is the bottom of the implied move. Bottom of the implied move for Friday, 202, and we also have the 1-week 35 EMA. We did see that as support twice last week. So after we bounced right here, we got back up, dropped, and 35 EMA caught us again right here. And then that is right underneath our implied move for tomorrow and just above on Friday. And then just to zoom out and show one more level, we do have the 1-day and 1-week 200 moving averages. Combined, those two levels caught us last Monday, and then we bounced right back up, and that is just underneath the trading range for the next 2 days. All right, and then let's take it over to DIA. So for DIA, the trading range is set up just a little bit differently because we only have weekly options over here. So I set up the weekly implied move over the weekend. The implied move over here is between 387 to 403. And then each day we have the 30-day average volatility. So for tomorrow, the trading range is between 394 and 406. So you could see that the top of the trading range for tomorrow is sticking outside of the implied move for the week. And then to the upside, the first level to look for is going to be this down gap right here. So this is the down gap from after Amazon earnings. And today we did get into this bull gap right here. That was from just a little bit before that. I don't actually know what this gap was from, but we did fill that gap, and then we got pushed back out by the bear gap. So this bear gap right here is going to be at the top of the trading range tomorrow. And let me actually put my arrows in so you could see the actual trading range a little bit better. So 394 to 406 for tomorrow. So then we had that bear gap at the top right here, top of the trading range 406, And then underneath us, we have the 1 hour 200 moving average, the 30-minute 200 moving average, and the 35 EMA. So a reasonable amount of support right here to catch us, but if we do break that, then the next support is this 50-day moving average. And when we dropped last week, we dropped to the weekly 35 EMA, and then we came back up to the 50-day moving average. We did see that as resistance, and then later in the week we did come back up to the 50-day moving average, got above it, filled this bear gap a little bit, and then got pushed back out. So then this week for inflation data, we saw that gap up, we got back above the 50-day moving average, and then pushed higher. So it is possible if we come back down to that level, we could see that as a support. Previous resistance could turn into support right here. The 50-day moving average is a really big level. And if we do lose that level, then we do have the 4 hour 200 moving average underneath that. And then at the very bottom of the implied move on the week, we do have this up gap. And that is from last week, Wednesday going into Thursday. So that is it. We have this down gap right above us. And if anything's going to keep us within the implied move on the week, it's going to be this bear gap right here. So there you have it, guys. Everything you need to know across all the indices for tomorrow. So have fun, trade safe, make sure you take profits when you're up.